understand when it comes to loans and lines of credit, people think they're the same thing, but they're really not. Today, I'm going to make sure you have a full understanding of what a loan is and a line of credit and the benefits of a line of credit. But give me one moment. I'll be right back.
You know I'm a stranger,
Today, okay, welcome back. Today we're going to talk about loans and lines of credit. People say, well, you know what? They're the exact same thing. No, they're not the same thing. Now, I will say this. I know we talk about lines of credit. You guys, no matter what, it's still a loan, but it operates so different. Number one, when it comes to a loan, let's say a house loan, that is on what they call an amortization schedule. And the reason why the banks kind of get us is because they say, hey, I'm going to offer you, well, I know back in 2014, 2015, the rates were just wonderful. They would say, hey, I'll offer you a 3% interest rate. This house is $300,000, but your payment's going to be this small. That is how the banks trick us. They make us think that, oh my gosh, I have this 30-year mortgage. I have a home. I'm a homeowner. No, you are just holding a note for the bank. You don't own the home. When you pay the home off in its entirety, you are free and clear. But let's say this, for that $300,000 home, under the amortization schedule, it's going to cost you probably about maybe $600,000. So you always thought, I couldn't afford a home. No, you can afford two homes. You're going to buy the bank's home first. You're going to buy your home second. For the simple fact is that they charge you interest every single month, and it's front loaded. So they're going to get their money up front, which means for the first 7 years, you are barely tapping that principal at all. You're paying all that extra money to the bank. It's like you're throwing that money away. But when you think about, when you move into what they call a line of credit, you guys, a line of credit is open-ended, which means that you can pull from that, you can pay it back. You can pull, you can pay it back. With a loan or a mortgage, all the money is going into that loan to pay it back. You can't pick and pull from that. So let's say an emergency came up, and let's say you had what they call a HELOC, a home equity line of credit. You had a $100,000 HELOC. You can actually pull from that HELOC anytime you needed to take out any kind of emergency expenses. With a loan, a mortgage, you can't do that. It's only feeding inward. It's not going to give you anything back. You can't take any money out of a loan. You're just feeding that loan all the time. And also remember, when you're feeding that loan, you're feeding the interest first. The principal is going to be second. They're going to skim theirs off the top. Then you just pay the little bit left over towards your principal. But the banks also know, well, you're probably going to stay here for maybe 5 to 7 years. You won't stay here longer than that. Then you're going to get another home, and you're going to start that vicious cycle all over again. If you watch my video right here, it's going to show you how you can pay off a mortgage in record time, not having to have a second job, not having to rob Peter to pay Paul. There's a strategic way to do it, but I'm going to put a caveat here. You have to, number one, be responsible. You have to have a good credit score between a 680, 700. Those are great credit scores. And you have to just be willing to say, I'm going to work the system so that I can pay off this car or this house or these credit card debts. And one thing you guys I've learned is that even if you decided that I'm only going to be in a house for 5 or 7 years, maybe your job is going to move you. Maybe you're not always stable that long. You have to maybe get up and move because maybe military or something like that. The beauty of Velocity Banking is that you can actually pay. We'll show you how to pay so much of that principal down. So let's say when you go to sell the home, doing it the bank's way with amortization schedule, you may come out of there maybe with $50,000 in equity when you sell the home. When you do the Velocity Banking way, you can walk away easily with $200,000 or $300,000 because we teach you how to use your line of credit to run down the payments, thereby eliminating all the interest, and you're hitting the principal much quicker. Let's say, for instance, if you decided that, okay, I have my HELOC, I'm working my HELOC. The goal for the HELOC is to teach you to strategize it so that way you are bringing down all of your balances down to low numbers because you're hitting the principal that much quicker and that much, more. It's more fierce. It's kind of like this. It's 2.0. Velocity Banking is a 2.0 way of paying your bills down. But I also say this, when it comes down to it, people say, well, you know what? You're moving one debt to another debt. Not so much. You're moving from a loan to a line of credit. Remember, a line of credit is open-ended. Emergency came up, you can pull from that line of credit. Go ahead, utilize, take care of the emergency, and you pay it back. With a loan, not necessarily. You're not going to do that at all. You're going to feed that loan until it's paid off. One of my viewers had something, she was so wise when she said, I'm realizing something. When I take out a loan, even if I paid a car loan off for 3.5 years out of a 4-year term and I've done well, if I have a job loss and I miss a couple payments, they're going to knock on my door to come and get that car. If you have a line of credit on that vehicle, guess what? You had an emergency come up, don't worry about it. That line of credit is there. You can pull from that line of credit. So that's the difference. With a loan, you're feeding that loan. You're paying that loan. And it's front loaded interest. You're paying all of that interest. With a line of credit, you can pay from it, pull from it, pay from it, pull from it. Most of those are between the 10 and the 20-year terms typically, which means you can draw from it for 10 years and you pay it back in 10 years. You can't beat that. And the way we teach you is that when you're pulling from your line of credit, you're paying it back on time. You can use it to get real estate, invest in properties. You can use it to pay off of a car. You can use it to pay off your kids. No debt for college. You can use a line of credit to pay off their college. And guess what? You're doing it with your current income. But caveat once again, you have to make more than you spend. By that, I mean that if you bring in $5,000 a month and you spend $5,000 a month, it's not going to help you because you're defeating a purpose. But if you have what we call a positive cash flow, that is the money left over after you paid all of your bills. We're going to work from that positive cash flow. And you may say, well, I only have $2,000. You guys, if you had $2,000, you had a line of credit of, let's say, $10,000, you can run down and pay that line of credit off in 5 months, which means you can pick and pull from it once again for a 10-year span. You can't beat that. Once again, I'm just going to tell you, I've learned something that people say, well, with that velocity banking, you have to be rich. No, you don't have to be rich. There are folks that are making $2,800 a month, paying all their bills, and still are paying off credit cards in record time. If you don't tell your money where to go, you're going to wonder where it went. You have to know and use a strategy to do that. The banks have lied to us and make us think, oh, you're doing a great thing. You got this house, your payments are low. No, they're robbing you with interest. And you may think, well, my house almost paid off. I'm doing great. But how much have you paid in interest? So I'm going to encourage you to move from a loan to a line of credit. If you don't know what that is and you don't know how it works, watch the videos. It is going to click. Just keep watching them, rinse and repeat. It's going to click. One thing I always say is that when I do these charts, just go ahead and put your numbers in there. You know where your debt is at. Put that in there. You can figure it out. But if you need help, I'm here for you. My information is www.dividend-friend.com. I do consultations, really reasonable. My goal is to help as many people as I can to come out from under the amortization schedules and to get into line of credit and work the line of credit to your benefit. You wonder how the rich are doing wonderful things. They're still rich. They know, you guys, they don't do loans. They do lines of credit, but they know how to leverage their money to make it work for them. So until the next time, until the next video.